Thank you for joining me. I'm Alexandra, and I want to talk about Caterpillar. I've just covered two Dividend Aristocrats with PBCT and 3M, and I figured I'd do another because if you're a dividend investor, Dividend Aristocrats are kind of a really good idea. They do construction equipment, obviously, and pretty much any construction site you see Caterpillar equipment. Current stock price $198, which gives them market cap of $108 billion. Revenue $41.7 billion, which is down significantly, and it's not looking great, but kind of to be expected. Earnings down to $3 billion, which is a loss over, or rather, earnings are down 50%, which gives them PE of 35 with a forward PE of 25. 25 is actually not that bad. 25 is kind of in a range that I can deal with. Dividend yield just over 2% with a payout ratio of 75%. Obviously, payout ratio wouldn't be that big of a deal if they had the 6 billion earnings of the previous year, under 40%. Obviously, with a PE of 25, they can get that down to, 60%, 55, something like that. So, not terrible necessarily. Total assets $78 billion, total liabilities $63 billion, which gives them a total stockholders' equity of $15.3 billion, which is slightly up. Definitely not a great balance sheet. There's things being balanced is not a great thing. And a stockholders' equity of $15 billion with a market cap of $108 billion, obviously also not a great thing. As far as risk factors go, global pandemics, recessions, that kind of thing, obviously a huge problem. Otherwise, I don't really think that there's any new risk factors that are coming up. So, very stable company, raised their dividends 25 years in a row. Obviously, as soon as construction companies are starting back up, they're going to do better. Not necessarily well, but better. So overall, I think that with the company being this stable and raising their dividends 25 years in a row, obviously always worth a closer look. Growth investors obviously out because obviously there's no current growth and there's not going to be huge growth long term. Dividend investor, I think, should be looking into the stock. I would prefer both of the companies that I've covered. 3M, reasonable dividend, very low payout ratio. PBCT, pretty nice dividend, decent payout ratio. Caterpillar, if you want to diversify, I think it's a good play, but I would prefer something else. For a value investor, the balance sheet is decent at best. PE is just kind of too high. Dividend is a nice bonus, and if they can get back to the earnings of $6 billion, they would have a nice PE, but it's not even forecasted that. But with the company being this stable, I think there might be an opportunity in the future to look at the numbers, do some research, maybe invest. That's it for me for today. If you like this video, make sure to subscribe. I'm coming up with more videos every day before market open. I hope you have a successful day.